All right, so Lucid's latest quarterly report just landed, and on the surface, it looks like a pretty classic growth story. But if you dig into the numbers, there's a huge, high-stakes, multi-billion-dollar gamble happening on the future of driving itself. So in this explainer, we're going to decode what's really going on here. Let's just kick things off with this number, 116%. So what is that? Well, that's Lucid's massive year-over-year production growth. I mean, it's a huge figure that just screams momentum. But, and this is a big but, as we're about to see, it's really only the first chapter of a much, much more complicated story. So first up, let's look at Lucid's Q3 scorecard. You can think of this as the highlight reel, the top-line results that are grabbing all the headlines. And honestly, if you just take a quick glance, it really does look like Lucid is firing on all cylinders. Production, deliveries, revenue, all the key things you'd look for to see a healthy, growing company are pointing straight up. It's the kind of report that gets investors pretty excited. Okay, so let's dig a little deeper here in section 2. We're talking more cars, which means more revenue. Let's really get into the nitty-gritty of the numbers behind this powerful growth story. All right, here's the first key number for you. In the third quarter of 2025, Lucid cranked out 3,891 vehicles. Now, this is the real engine of their growth, right? It proves they can actually scale up their manufacturing, which is definitely no easy feat. But here's where it gets really interesting. Check this out. They actually delivered more cars than they made in the quarter, 4,078. And that is such a crucial detail, because it tells you they aren't just building cars to let them sit on a lot. No, they're selling what they make. And all that activity, well, it adds up. Those deliveries brought in $336.6 million in revenue for the quarter. You can literally draw a straight line from the factory floor right to the company's bottom line. Now, to put that growth in perspective, take a look at this. We're comparing Q3 revenue from last year to this year. It's a huge jump, from $200 million all the way up to over $336 million. That is a powerful 68% increase year over year. I mean, come on, by any standard, that is some seriously impressive growth. Okay, so everything's looking pretty amazing, right? Production's up, revenue is soaring. What's not to love? Well, this is exactly where the story takes a really sharp turn, and it brings up a huge question. What is the real cost of all this growth? And that leads us right into section 3, the billion-dollar reality. Yeah, so now we're going to pull back the curtain on all those shiny revenue numbers and look at what it's actually costing them to expand. And there it is. For all that growth, for all that revenue, Lucid posted a net loss of $978 million. Let that sink in for a second. That's in one single quarter. It's a staggering number that completely reframes that positive growth story we were just talking about. So you gotta ask, where is all that money going? Well, this lays it out pretty starkly. It cost Lucid over $670 million just to generate $336 million in revenue. Think about that. They're losing hundreds of millions just building their cars. And that's before a single dollar is even spent on research or marketing. And that brings us to this metric, free cash flow. Just think of it as how fast a company is burning through its cash. And for Lucid, it was a negative $955.5 million. They are spending almost $1 billion more than they bring in every 3 months, just to keep the lights on and the factories running. This really gets to the heart of it all, doesn't it? Why on earth would you spend so much money? Is this a sign of a business that's, well, failing? Or is it something else, like a calculated, strategic investment? And maybe the biggest question of all, is it even sustainable? Well, the answer, or at least the start of it, is in our next section, betting on an autonomous future. You see, this isn't just about managing losses. It's about funding a massive, company-defining pivot. And this is the key takeaway. Lucid is trying to signal a major shift. They're telling the market they are more than just a luxury car company. They're building a next-generation technology platform. And that kind of ambition, well, it's incredibly expensive. And look, this isn't just talk. You can see their strategy in action right here with their partnerships. They're collaborating with NVIDIA for the brains of the autonomous system. They're with Nuro for robotaxi development. And they have a deep partnership with Uber to, eventually bring it all to market. These are huge moves in the autonomy space. And here's the end game, straight from their interim CEO, Mark Winterhoff. He says they are positioning Lucid to be among the first to bring Level 4 autonomous driving to privately owned passenger vehicles. That right there, that's their moonshot. This is what that billion-dollar quarterly loss is funding. So that brings us to our final section. What does this all mean? I mean, how does a company burning this much cash possibly fund a moonshot like that?
Well, it's pretty simple, really. A strategy this ambitious, this expensive, needs an incredibly deep financial safety net. You simply cannot bet the entire company on a long-term vision if you can't pay the bills for the next quarter.
And here is that safety net. Lucid's primary backer, Saudi Arabia's Public Investment Fund, or the PIF, just massively increased their line of credit from $750 million up to $2 billion. That boosts their total available cash to a staggering $5.5 billion. That's the war chest that makes this whole high-stakes strategy possible. The company's CFO, Taoufiq Boussaid, he reinforces this point. He says their solid liquidity position is what supports both their short-term execution, building cars now, and their mid-term strategy, which is that big bet on autonomy. This is a clear way of saying, don't worry, we've got the cash. This is all part of the plan. So when you boil it all down, the entire story of Lucid's quarter can be simplified to these 3 steps. Step 1, grow production and revenue at all costs. Step 2, incur massive short-term losses to fund that growth in R&D. And Step 3, invest every available dollar into winning the autonomy race. Look, it's a bold, incredibly expensive strategy. Lucid is racing toward the future, fueled by billions in capital. But the real question this report leaves us with is this: can they build the road fast enough before the money finally runs out?